Time is running out to make life-changing gains or returns within the crypto market. In today's video, we're going to assess exactly why that is the case. I'm going to show you what I'm looking at within the markets, and I'm going to show you the collapse of the volatility and why this needs to be viewed in the right light. Otherwise, you are going to miss out on one of the biggest opportunities of your lifetime. So smash the like button, hit the bell notification, and subscribe to the channel today. And let's get straight into the show. We are looking at the collapse of the VIX, that is the volatility index for the S&P 500, of course, that being the stock markets, which tend to drive the biggest liquidity within speculative markets. So if you look over here, this is a thread from Game of Trades, and it's something very important to look into because it actually drives the final phase of the bull market, right? The final phase of the bull market is where you make 80% of the gains, right? 20%, the final 20% of that bull market will bring you 80% of all of your profits. And if you view this in the wrong light, you're going to misinterpret the market, you're going to get left behind, and you're ultimately most likely going to buy the top. So in today's video, we're going to assess why this is so important. If you look over here at Game of Trades, they say the credit risk in the US is at its lowest level since 2007. This might seem positive, but it's actually negative. That's at least in his viewpoint. I'm going to show you my viewpoint in today's show. He says that we've seen this pattern before, right? In the Asian financial crisis, which happened in 1998, the dot-com bubble in 2001, the financial crisis in the US and worldwide in 2008. He said each time low credit risk was a prelude to periods of significant financial stress. So there is a lot of doomsday, at least sayers that are still out there within the market calling for the collapse of markets. But ultimately, when you look at the volatility, as well as not only in the stock markets, but in crypto, it's very, very important to interpret it in the correct ways. And although he's correct, remember, a broken clock is also correct twice a day. So it's very, very important to have an understanding of when this becomes significant. It is significant, but it's only significant when it starts to expand above a certain threshold. And ultimately, when it's in that contraction phase and it starts to move into the lower levels, that being the VIX contracting and squeezing lower and lower, ultimately, that's where you see the biggest trending moves within the stock market. And we also have our very own volatility index for Bitcoin. Very, very simply, it's the Bollinger Bands, right? If you look at the Bollinger Bands and you were to put that onto your chart, so that's those lines over there. I have Bitcoin on a line chart, and you throw the Bollinger Bands on. When they squeeze and contract close together, that's showing periods of low volatility. And this is a very important time to remain focused and not become complacent within the market. You want to be highly, highly focused on the Bollinger Bands when they're squeezing in towards each other and they're printing periods of low volatility. That's where you want to be establishing your longer term positions, which when expansion eventually comes into the market and these Bollinger Bands start to move apart from one another, you get your biggest trending moves. And that's where the most money is made, right? Again, the Pareto principle, the 80-20 rule. You're going to make 80% of all of your money in the final 20% of the bull run, which is when the BBWP, which is the lower bands over here, the Bollinger Band with percentile, very simply put, this is just a lower chart indicator that will represent what is happening with the actual Bollinger Bands over here. So I'm going to turn the Bollinger Bands off so as not to have any confusion. And if we look at the previous price action over here, you can see when the Bollinger Bands reach into these extremely low levels, showing low volatility, similar to the VIX, that's ultimately where you want to be establishing your longer term positions. That is the reaccumulation phase, right? So if we were to mark this off over here, you can see we have a clearly defined range. Now, remember that markets can trend and markets can range, right? So if you mark out these various different range levels, there you go. Then once you break out of this range and you leave this range, as you can see, marked by the low volatility, during those periods of low volatility is going to be the absolute best time. There it is. Low volatility, BBWP squeezing into the low levels. Those are the times of reaccumulation, right? That's where you would have been buying. That is your reaccumulation zone. And then, of course, you also got a little bit of an entry over here. And that's where the BBWP started to pick up, lift towards the upside, and prices went parabolic. Now, this is no different, right? If you fast forward to where we're at right now, although we've already we've not only left the trading range, we've already started to establish a very, very strong trend. Prices now come back back down into these key levels, right? We had a back test into the $60,000 region. The BBWPs are fully reset. Now, if you do want to learn more about this, there is a link below in Whale School. We're going to be doing the next cohort is coming up soon. So make sure that you stay till the end of the video if you want the full picture. And that is just the tip of the iceberg of what's actually out there for you to learn in Whale School. So with that being said, we can gain an understanding that this is a significant time in the market. And when you're in periods of low volatility, that's the best time to be accumulating or establishing your longer term positions. Now, another way that you can look at it over here is if you focus on the funding rates, right? What are the funding rates? The funding rates is how much you're paying to keep positions open, right? Now, when funding rates are extremely positive, that's where you see your strong trending moves. Same time as when the Bollinger Bands are expanding away from each other and the BBWP indicator is rising towards the 100th percentile mark. Now, that's historically the worst time to be establishing long-term positions because that means that you probably going to be buying the top. The best time to be establishing these positions, again, is in periods of low volatility and when the funding rates go negative, meaning that you're actually being paid to hold long positions. Remember, when the funding rates are very positive over here, you are paying to hold a long contract, a leverage long contract open. When they go negative, you're being paid to keep that position open. Now, if we go and have a look over here at the various different levels where we found major bottoms within the market, I marked them off with vertical lines, the blue vertical lines that are running down. This is within this cycle, right? So since the bottom of this cycle at $15,000 and as prices increase. Now, you can see every major bottom that we've seen within the market. So this was the FTX collapse, extremely negative funding. Of course, in hindsight, a very strong buying opportunity, but you didn't have enough information at that period of time to go long other than just the funding rates because you were still in a downtrend. So as I teach in Whale School, you're going to be looking for opportunities of confluence, right? Where you want to see confluence within the market. So this was the very first time that price ultimately started to recapture the range level. You can mark off your horizontal range, right? So in trading, you'll learn that a deviation is a reclaim of a key range level, which is what you got right at this point over here. That means you've gained acceptance above a key level. You ask yourself in trading often, did I gain a level or lose a level? In this period over here, you would have lost a level. So despite the negative funding, it's not enough to go long. Over here, you had now gained a level. It's an opportunity to go long. Plus negative funding over here means that you can size up on your position as you're already starting to establish an uptrend with higher highs and higher lows. So in Whale School, you're going to learn a lot about high highs and high lows. You're going to learn a lot about trends. You're going to learn a lot about ranges and when to interpret which one we're in. And ultimately, that will show you which strategy you should be employing in your trading endeavors. So negative funding over here, buying opportunity, price goes up. Over here, again, we came negative within this period, but this is where the ultimate low was set, price went up. Negative funding over here, that marks the bottom of that correction, price goes up. Again, we go almost negative over here, price goes up. And once again, the most recent that we've had within this correction is funding went negative on that exact bottom. And now we're looking for this correction to come to its end and price to go up. Funding has been fully reset within the market. The yellow and orange zones are not where you want to be adding leverage long positions. And I'm going to show you the position that I have open. So stay till the end of the show. I'll show you my rationale, my thinking, and my reasoning behind building this big leverage position. It's got everything to do with what I'm telling you now, right? Negative funding, BBWP or Bollinger Band width percentiles are at extreme low levels, and we're looking for a pretty major move. We also want to see Bitcoin flip $69,000. Now, in Whale Room, which is, of course, the private Discord, I give a pretty in-depth analysis as to why that $69,000 level being flipped is very significant. But many of you may be wondering, how long will it take before we can confirm that, right? Well, there is some fundamental factors which are coming into play. This just came in right now. 𝗪𝗛𝗪𝗪 says over here, don't forget that this starts this week, right? This is $2 billion of new liquidity liquidity coming into the market. We haven't seen this for a long time. The printers actually turn on the 29th of May. We know when the Fed bring new liquidity into the market and the M2 money supply increases towards the upside. Generally, that's when crypto and markets rally in that environment, right? Because that liquidity needs to move somewhere. So with that being said, how much longer could this correction last? Well, this is in alignment with the negative funding, which I've just shown you. We've had a couple of major corrections, to be precise. Within this cycle, we've had 5. We're in the 5th major correction right now. Now, previously, we've looked at how long it took to get from top to exact bottom and what the drawdown levels were. If you look over here at the first correction, it took 22.79% drawdown, and the time to break back above those highs was 29 days. So relatively short, right? 1 month to complete the drawdown and reclaim the highs breaking out. The second one over here, we had 20.31% drawdown, and it took 70 days to reclaim. And then we almost immediately went into another correction, which was 22.1%, and that took 102 days. So that was the longest correction that we've had, being 102 days. This one over here was 21.79% drawdown with 30 days before it took out those highs. And now we're currently in this correction, which price drawdown wise is exactly the same, right? In terms of the percentage drawdown, you can see 22.79, 20.31, 22.1, 21.79, and the latest correction has been 23.51%. Now, we're currently sitting at 73 days, so it's the second longest correction that we've had within this cycle. So on the further end, what happens if it does actually end up being 102 days just like the other ones? Well, you can see that at some point in June, you should already be trading back at those all-time highs. So I've marked it off. That would mark off 102 days in terms of from current price levels to that date, or at least from current date levels to that date. You'd be looking at another 30 days. So give or take, you're probably looking at just under another month, 28, 29 days, and you should most likely be trading at all-time highs. I tend to think it's going to happen sooner than not. For the full detailed analysis of why, go into Captain's Take in the Whale Room Discord. That is the private Discord. There is a link in the description below. But for the free education, right, the Whale School trading course is valued at $3,000. But we said if sponsors are willing to sponsor it on behalf of you, then you can pay nothing, right? It's completely free. So the link is in the description below. You have 3 days, 6 hours and 13 minutes left to join. You can thank the sponsors that are listed below over here who have ultimately paid for the course for you. You get it entirely for free. We're going to begin on Wednesday, right? On Wednesday, the 29th, which is just before the end of this month. Now, if you look over here in terms of the money printer and the macro trends with how the market tends to move, everything that we're seeing with the BBWP and the low volatility is exactly in alignment with there should be a major move coming, right? If you look at TechDev, he says Bitcoin has always printed its macro USD highs 12 months from this point, right? In the 3.5-year global liquidity cycle. So the Fed printing money and slowing down on quantitative tightening ultimately means newfound liquidity is coming into the market. Global liquidity signal has been fired off over here, and you can fast forward 12 months. This is why ultimately time is running out, because it marks the end. Potentially, if you want to be aggressive on when it ends, meaning you want to be early to taking your profits, well, then you would likely say that you want to start to exit the market by the end of this year, beginning of next year, Q4 this year, Q1 next year. Let's call it a day and say the 31st of December, so we can start the 1st of January 2025 nice and fresh. Now, that's in alignment with what my viewpoints are over here, because if you look at this chart over here, this is my macro roadmap for what I think will happen with Bitcoin, because we've seen Bitcoin is very cyclical, and so are global liquidity cycles. You have from bottom to bottom, so the bottom of this cycle to the bottom of the next cycle was 47 months. You have the bottom of this cycle to the bottom of the next cycle, which was the FTX collapse, 47 months. Now you can do the same thing by looking at top to top. Now, if you were to take the starting date of the actual top, this is where the top happened on high volume. This was artificially a top due to leverage within the market. Then you get a more conservative date where the end of the cycle most likely comes in the yellow zone over here, which again is going to be in alignment with what TechDev shows. That's going to be Q1 of 2025. So with that being said, time is running out. That means that you have about 218 days left to make life-changing gains. And on top of that, you have about 3 days left to sign up to Whale School. So it's now is the time to start to get your education on, and you don't want to be trying to scramble to understand how markets work when we're in that peak euphoric phase, which again, in my analysis on why flipping $69,000 is so significant, you'll understand why that time could be coming sooner than you expect. So with that being said, what are some of the fundamentals and changes that you could see within the market that could drive this interest? Because first it happens slowly and then it happens very, very quickly. The snowball effect, right? The snowball starts rolling down the hill bit by bit by bit, gathering more and more snow. And before you know it, it's this behemoth thing that's rolling down the hill out of control. And boom, the market blows off and it's a blow off top. And the prices come down very quickly, but everyone tends to come in at the same time in the final 20% of the run, which is why you're going to make 80% of all your gains in that final 20%. So you have Sol under pressure to approve crypto ETFs. Other countries and nation states are being pressured to run into this crypto race, right? That's one thing over here. Another thing over here is you're seeing political competition within the US in terms of the elections, which are going to be coming up. This is quite a radical turn for someone like Donald Trump, who in the last cycle was pretty against crypto. And I think following this speech, he probably has every US crypto candidate willing to cast their vote in Trump's favor. You can have a listen to exactly why.
I will ensure that the future of crypto and the future of Bitcoin will be made in the USA, not driven overseas. I will support the right to self-custody to the nation's 50 million crypto holders. I say this with your vote. I will keep Elizabeth Warren and her goons away from your Bitcoin. And I will never allow the creation of a central bank digital currency.
So big news, that final statement, I'll not allow for the creation of a central bank digital currency that will gain worldwide interest, right? So huge, pretty huge. Now you're probably going to see the Biden administration retaliate with some form of positivity around crypto as well. And this is how you get those peak euphoric states within the market. So we recently had the ETH ETF approved. We're still waiting for it to actually go to begin trading. Well, this was just the first part of the paperwork over here. And if you look at Ted, he says, will ETH follow the same trajectory as Bitcoin? The ETH ETF was approved on Bitcoin over here at 48K. It did come down temporarily to about 38K, but following that, it pumped 54% up to $74,000, which is the current all-time high that we've seen just a couple of weeks ago. The Ethereum ETF was approved and it's trading at 3,700. Yes, you might come down to about 3,200, filling the fair value gap, right? The inefficiency candle that you see over there, and ultimately finding support and then probably pumping at a later date. This could mean that you could see it at about $5,700 at some point in July. Now, with that being said, Saylor, who's obviously one of the biggest Bitcoin bulls out there, could be in trouble, right? I wouldn't say he's in trouble because he has a much longer term plan, but it just shows the thinking of TradeFi, right? TradeFi is going to learn that in terms of each additional dollar which they put into the Ethereum ETF versus Bitcoin, because they're different market caps, will result in about 15 to 20 times the impact on that market cap compared to Bitcoin, right? So every boomer that missed Bitcoin will probably start to jump into ETH. At least this is this guy's opinion over here. I wouldn't necessarily say that's exactly what's going to happen, but I would definitely say that's something to consider, right? That each dollar invested will move the market cap at a much higher rate than what the market cap of Bitcoin will move with each dollar placed into Bitcoin, because naturally Bitcoin has a significantly higher market cap, right? So lower market cap, so so easier to move. This is one reason why I'm starting to establish positions within the market. I'm expecting this wave to come of, euphoria and interest within the market. Now, it's not that it's necessarily going to happen tomorrow or the next day or the day after that, but at some point within the next, let's say 6 to 12 months, are we trading higher or are we trading much higher? I don't really even put the possibility or the probability being high that we're going to trade much lower. It is, of course, possible, but I think it's very improbable. So I think it's a question of higher or much higher. Therefore, I want to be establishing my positions right now. And if you look at tech dev over here, alts are entering a textbook markup phase with that perfect rounded bottom over there, breaking out of the trading range and consolidating. We've got a couple of different charts over here. We're looking at the crypto total market cap excluding the top 10 coins over here. This is the true degen altcoin market cap with a perfect retest, creating higher highs and higher lows. Now, again, if you want to learn more about these trends and analysis and how I view the markets and how I find my entries into the trades, remember, use the link in the description below. Sign up to Whale Room. I also want to encourage you, do not Google whale school, right? Or Whale Room for that matter. There is a lot of scam websites that are out there looking to take advantage of your personal information and ultimately scam you. Please use the link we provide in this YouTube video right here. This is the exact one that you need. You can be sure it's going to take you to the right place. Sign up, use the link, and let's get going. Right. In terms of what's going on with Bitcoin over here in its range, so in terms of trends and ranges, right? In the broader spectrum, yes, we've been trending for a long time. Remember, this was our initial long entry that we took based on the chart pattern which we had, which was a falling wedge, which is typically a bullish formation. We saw the negative funding, price started to break back into the range over there. We went long at 17,200 and then aggressively long with full size over here at about 19,200, and the trend started to move towards the upside. But during those trends, you get periods of ranges and consolidation like that, right? That's an example of one. Here's another one over here. Those are during those contraction phases. Now, this is one reason why we went long over here, because although we understand you're in a broader uptrend, we also understand that the market is still ranging. And ultimately, the break below the range and the reclaim was our signal and trigger to put on more longs, and we're targeting the top side over here. So price is currently above the pivot level, which is based on the RSI, meaning if we're above it, the RSI trends towards the upside. We're above the 200 EMA on the 1 hour and the 4 hour time frame, and we're above the mid-range. So all in all, it's pressure on the bears to try and bring price down because the bulls remain in control, looking to set this in as your next high low and push price up towards the range high. And for that matter, as well as everything else that I've shown you in this show today, I'm busy building a pretty substantial long position. If you look over here, I'm currently running almost $500,000 long position on a rune trade over here, looking for a potential break into this resistance and hopefully through, right? Now, I will need to get careful over there, but you have a series of higher highs and higher lows in the making. Currently, we're up $6,000 on this position, and we're looking to build this into a multi-million-dollar position. So if you want to know more about that and the thinking of how I did that, that is also in Whale Room. Remember, there's Whale Room, which is the private Discord, and then you have Whale School, which is 100% free, right? That's all the educational material for free. So that is the rune trade. This is it over here. Now, one thing that I did is I scaled into the position. You'll see this is obviously the risk to reward tool, which would make it look like I went heavily down at one point. But using risk management, of course, I had capital allocated in the event that we were to draw down further so that I could add more. Now, the way that I do that is as such, right? If you look over here, you can very simply go onto your Fibonacci tool, which is this one over here. There you go. You click on the Fib retracement tool. You mark off from the top area of interest down to where the worst case scenario is, where you invalidate on the trade. And this is typically how I would scale into position, right? Then you can double click on that. You can go through to the style and you can label it like mine, 0, 0.1, 0.2, 0.3, and you just keep going up in increments of 0.1 until you have 1. That means that you have 10 different zones of interest, right? Then you can scroll down. You want to represent the prices, and this will show you exactly where to place your orders, right? So if you wanted to scale in a full size order within this zone over here, it will tell you enter rune at 657, 650, 644, 637, 631, 624, and so on. So that's how I got this position over here. That's how I scaled into the position. I'm in it. And if you want to learn more, I teach about the 5-point entry approach as well in Whale School. So the link is there. Now, I recommend that when you go about your analysis, please look to coins that are strong, right? You want to be playing coins like this, right? The coins that are currently in price discovery are showing early strength against the rest of the market. You don't necessarily want to be playing coins like XRP or Cardano. And no offense to any of you out there who are holders of that, my condolences go out to you. But the truth of the matter is they're in a strong downtrend, not only against USD over time, but they're in a strong downtrend against Bitcoin, which means you're better off holding Bitcoin, which is a much less risky bet as opposed to holding something like that in the hopes that it's going to go up. So some of the strong coins, 𝗵𝗴, Ondo, ACX, Ponke, Turbo, DMT, and Wojak, these are meme coins, right? A lot of those listed over there, 1 or 2 real world assets, and the rest are meme coins. Other coins that are looking to move with strength over here is 𝗵𝗴, MOG, 𝗵 ENS, which is an Ethereum naming service, and again, already mentioned, Ondo. So with that being said, have a look at those coins, look at the charts. If you don't know what I'm talking about, again, guys, please go through to the link below. Here it is. If you go to the link below, click on that. Whale School, it will take you to this. You need to use that exact link. Simply type in your email address over there, click sign up. You'll be emailed with what to do next to get into Whale School. And it's free education, right? For your own purposes, for your own resources. I've gone from, just a normal trading account, a normal average person, into multi-million-dollar positions through everything that I've taught within this course, entirely free for you. So that's the Sunday stream. I'll see you guys all on the next one tomorrow. Have a great day and cheers for now.